Late last year, SoftBank made a bet that technology will overhaul the home insurance industry by leading a $120 million round in the startup Lemonade. The company uses artificial intelligence and bots to minimize paperwork and speed up the claims process for renters and homeowners. So what has Lemonade been up to since this high-profile investment? We are joined now by Lemonade CEO and co-founder Daniel Schreiber in New York. Daniel, first of all, now that you've got this money, where have you been putting it to use, and what sort of progress have you made since this cash infusion?
Well, Emily, like you said, we've been investing a lot in artificial intelligence and really trying to build an entirely new kind of company that's built on a substrate of technology and data. And what that means is that we can use AI to pay claims. We pay claims in as little as 3 seconds. And most of our resources are going into exactly that, building a new kind of company built on that substrate.
Now, you obviously get a lot of very privileged information about your customers. And, over the last few weeks, we've been talking a lot about privacy, about data privacy. How are you sort of handling your relationship with the customer internally? And, have you learned anything at Lemonade since some of the revelations we've seen coming out of Facebook?
I think so. Insurance is a social good. It's an economic necessity, but it's not trusted. It hasn't been for hundreds of years. If you look at the Urban Dictionary, you'll see it's defined as a promise to pay later that is never fulfilled. So trust and trust-related issues have been endemic to insurance way before the Facebook issues rose to the fore. So we've really tried to build an alternative business model that aligns us with our customers. Insurance often finds you conflicted with your customer. If I deny your claim, I get to pocket those monies. And we built a different business model, kind of a Ulysses Contract, where we tie our own hands to make sure that we're really aligned with our consumers in a way that the traditional insurance players and some of the leading tech players have a difficulty doing.
So if I'm a customer, how might my experience with you be different than a traditional insurance giant?
I think you'll find very little in common. So when you buy insurance on Lemonade, you download the app or you go to the website, you'll be insured in a matter of seconds. Literally, if you've spent more than 90 seconds buying insurance, you're probably doing something wrong. So it's a seamless experience where you're talking to a chatbot. It's delightful, it's instantaneous, and more remarkable than that is that when you make a claim, it's the same thing. Zero paperwork, instant everything. A third of our claims are paid by our AI in 3 seconds. You press submit and the money is back on your debit card within 3 seconds. And the third part is not only does AI allow us to transform the experience, but it allows us to lower costs. So for first-time insurance buyers, younger consumers, the savings can be very dramatic. You're talking about 70, 80% savings more often than not.
So you guys have been spending a lot on advertising, and I'm curious how some of these costs have paid off in growth. How are the costs stacking up relative to the progress that you're making?
We're still a young company. We launched 18 months ago, so these are early days, but we are seeing growth well ahead of our expectations. In the 6 quarters that we've been in business, we've grown 100% quarter on quarter. So certainly we're seeing growth that has been way ahead of what we'd initially planned. And what that really means is that amongst first-time buyers of insurance, we've become the #1 brand. So our market share amongst early adopters of technology, but millennials and young consumers in general, has risen to the top so that we are now the first choice amongst renters who are buying insurance for the first time. So the growth has been surprising and fabulous for us.
And I'm curious if you could just paint the picture for me. Say Hurricane Sandy hits New York City again, or something like it. In your perfect world, how is the experience of those homeowners, those customers, different?
So we actually had to model Hurricane Sandy, so we haven't lived through it, but it was part of our modeling, and it is an eventuality that we're prepared for in many ways. So one is we're heavily reinsured. We have companies like Lloyd's of London and Allianz and other major brands standing behind us financially. And we are an insurance carrier, so we needed to have all of that backing, and the New York regulators, of course, making sure that we have the wherewithal to pay all those claims. But beyond the wherewithal, it's really about having the will to pay them. And that's a mixture of the technology piece that I spoke about earlier, the ability to handle claims very, very quickly. Our median time to pay a claim is in under a day. So we are talking about orders of magnitude better than what the industry has known so far. So it is that technology piece, but it's also the behavioral economics. When people worry about a Sandy, they're not worried that your insurance company won't have the wherewithal to pay the claim. they're worried that they won't have the will to pay the claims. So reinventing the business model, making a business model that is unconflicted, that never makes money by denying claims, all of that serves to engender trust, and creating an insurance company that is not only trusting but is also trustworthy is a key part to fixing this industry.
All right. Daniel Schreiber, CEO of Lemonade, thank you so much for stopping by.